Good evening, friends. This is the third of my series of webinars. The first one was on moving averages and trend lines. The second one was on Fibonacci numbers and Fibonacci ratios. And this third webinar is on MACD. Now, before we go on to talk about MACD, let us understand moving averages first. Or you can see the webinar posted by me about moving averages. But just to give you a quick recap, the signals that we get from moving averages are that when the price crosses the moving average upwards, we get a buy signal, or when the moving averages change their direction, we get a buy signal. For example, in this case, moving average is turning upwards, so we get a buy signal, and in this case, when the moving average is turning downwards, we get a sell signal. At the same time, the price is also coming below the moving average, so we get a sell signal from that also. And the third signal that we get from moving averages is that when we are moving using multiple moving averages, in which case one is a shorter term moving average and the other one is a longer term moving average. So when the shorter term moving average intersects or crosses the longer term moving average upwards, we get a buy signal. For example, at this point. Similarly, at this point where the longer term moving average or the shorter term moving average comes below the longer term moving average, we get a sell signal. Now, when we are using multiple moving averages, it sometimes becomes very difficult, or the chart becomes very cluttered up and confusing because of so many moving averages or so many lines on the chart. So a better way of getting signals plus a faster way of getting signals is the MACD. Now let me give you a simple example that in this case the low was made somewhere near say 3800. The price went above the moving average. Now we have got two moving averages here. The brown one is the 12-day exponential moving average, while the green one is the 26-day exponential moving average. Now the price is crossing the green line or the green moving average on the fourth day, somewhere near say 4170. Now the low was made at 3800. The price is crossing the moving average of 4170. So we have already lost 370 points from the move before we get a buy signal. Similarly, now if we look at this case where we get a sell signal here, or if I give you another example, we get a sell signal somewhere here which is near say 5050, and the high was made at 5300. So it is again 250 points we have lost before we get a sell signal. So now let us see if we get a better signal using MACD. But first of all, what exactly is an MACD? MACD stands for moving average convergence divergence. Now if you see, we are using two moving averages here. Now here the moving averages are together, they finally intersect each other, then they are diverging, again they are converging, intersect each other, then they are diverging. So there is a continuous convergence and divergence of moving average, and to see how much it is converging and how much it is diverging, we call that value, or we call that thing as a MACD. Now if we plot the MACD on this chart, MACD is calculated by calculating the difference between the longer term moving average and the shorter term moving average, and the point where the moving averages intersect each other, that point is known as, that is the point where the MACD value is 0. So here we see that the moving averages are intersecting each other, and at this point the brown line of the MACD is going below the 0 line. Values of MACD range from positive to negative, some values above 0 while some values below 0. Now usually we say that whenever the MACD is above 0, the market is bullish, while whenever the MACD is below 0, the market is bearish. But that is just a general way of saying it. We get faster signals by using a signal line. In this case, the signal line is this is this red line, and this is nothing but a 9-day moving average of the brown line or of the MACD. Now, once we got the values of the MACD here, we can safely remove these moving averages, and we can get a signal from these from MACD itself. Now, MACD, for example, if I use the period here, mm, we get a sell signal from the MACD here when the MACD comes below the signal line, which is somewhere near, say, 5000, and finally we get a buy signal back somewhere here when the Nifty is around 4000. So we've made about 1000 points profit here. Now similarly, if we get a buy signal here at 4000 and finally we get a sell signal here when the Nifty was 4400, we get 400 points here. And now this is a phase where the market has entered into a sideways moves. MACD is an indicator which works on moving averages, and as I told you, moving averages are not very good indicators for sideways markets. We should use oscillators for that purpose. So MACD, while they will give you a better signal than moving averages, but still they are not the perfect, it is not the perfect indicator to be used when we are in a sideways market. So this is a better indicator for trending markets rather than for sideways markets. For sideways markets, good indicators are like oscillator indicators like RSI or momentum or stochastics or Williams percentage R. Those are the signals, those are the some of the indicators that you could use for sideways markets. Now this is the chart of the Nifty. Does the MACD work well on stocks too? Yes, they do. Now suppose I have got the chart of LNT here. Again the 12-day and the 26-day moving average I have got. Now if we plot the MACD also on this chart, let's see, we get a buy signal somewhere here which is at 2400. We get a sell signal somewhere here which is uh, say 2700, 300 points profit. Again, if we look at this move, we get a buy signal somewhere here which is 2700, and we get a sell signal here which is 2900, 200 points profit. Now whenever we have a trending move, we get a good signal. For example, in this case we should have got a good signal. Now we get a buy signal somewhere here which is say 2400, and finally the MACD has come down here which is at 3200. We get 800 points profit, and it has come down, given us a sell signal and given us a buy signal again somewhere near 3400. So we buy it again, we get a sell signal here which is 4100, another 700 points profit. So these are the signals that we get from MACD. If you have any questions, please post them in the comment section and I'll get back to you surely. See you in the next webinar, which I hope will be soon enough. Thanks. Bye.